With August GDP data from the Office for National Statistics giving strong signals that the UK is entering a recession, following a 0.3% slump in GDP on the back of manufacturing, as well as the Fed over in the United States continuing to pursue hawkish monetary policy in order to curb inflationary fears, as well as potential economic crises happening on the global stage due to several different constraints from supply. The chip shortage is still occurring, and then of course wars as well in the middle of Europe, or Eastern Europe, I should say. Many people at the moment will be very concerned about what is going to be happening with crypto in the near future. However, this video is going to be looking at some of those key players, as well as some tech titans that are doubling down on their aggressive stance towards cryptocurrency, as they are clearly banking on it becoming something or being integrated as part of the main stage for the financial system going forward into the future. Before I jump into any of that though, just wanted to quickly touch on this piece of news. The second $100 million DeFi hack this week, Mango Markets was drained of $100 million in funds due to an exploit. Mango Markets tweeted Tuesday evening that a hacker was able to empty funds from Mango via an Oracle price manipulation. Only last Thursday, $100 million was stolen from the Binance Smart Chain, which is of course another DeFi protocol. It wouldn't shock you to know that Mango Markets is of course a Solana-based platform for trading digital assets on the Solana blockchain for spot margin and trading perpetual futures. Mango Markets is governed by Mango DAO. It almost isn't funny at this point as to see how many different exploits, hacks, and how frequently Solana is being targeted as a chain. I covered in some dedicated videos months ago at this point from some different independent research bodies saying that users' funds were at risk within the Solana ecosystem itself due to lack of development cycles and intervention from the core teams that are involved with that blockchain. And again, we look at these recent partnerships and it begs the question, why on earth are developers continuing to build on Solana at the moment when you have up and coming chains like Hedera, which of course is leaps and bounds ahead of security. Talking about Hedera anyway, many of you recently would have seen the price appreciation we've been having over the last sort of 24 to 48 hours. I'm over here on TradingView. If we look at some of these sort of candles for the last couple of days, we can see on Tuesday the 11th, a nice big green candle towards the upside, and today, Wednesday the 12th, an even larger green candle towards the upside. And this is off the back of volume in the millions, or the high millions returning. So we can see here at the moment, 21.5 million tokens of volume currently occurring. Really bullish at the moment, and there is some key headlines, which of course is driving this. Before I jump into any of those key headlines and some of those tech titan partnerships though, I did want to do a quick recap on staking. That there was a really interesting tweet which I will throw up on screen now. Now here's my responding tweet to the original one from Hedera. Of course, if you're not following me over on Twitter, I suggest that you do. I do reshare and tweet a lot of this information before I cover it in any of these videos, as of course it's quick and easy to reach a lot of you guys. But I basically turned around and said, it's happening for the HBarbarian community. HBAR native staking rewards look like they will be going live soon for Hedera. And of course, make sure you're staked to a node via your wallet of choice. I do have a tutorial on the channel showing you guys how to do that via Hashpack app. And of course, that can be used for some of the other wallets like Blade. If we look at the original tweet, it was an announcement saying all staking minimums per node have now been met. Make sure you're ready for HBAR staking rewards to go live by staking your account now through hashscan.io, Hashpack app, Blade Wallet, Walla Wallet, or Yamgo app. And then there's the node data over on Hashscan. So if we take a quick look at the node data, there are of course minimum staking requirements for each of these different nodes. And we can see the stake range now, they're all past the minimum stake requirement, which means they're gearing up to move towards the next phase of staking. Now, of course, I did have a dedicated video talking about the different phases of staking, and I'll quickly recap some of that information now as it's very important. They also recently tweeted on the 8th of October, so a few days ago now, this Egyptian hieroglyph, which is effectively just steps, and that was it, nothing else. Potentially could be in relation to some form of step function going live, and that would tie back into those mainstream use cases that we've spoken about in depth for weeks and months at this point, things like Avery Dennison's @.io and the Coupon Bureau, amongst others as well, building on-chain or on the DLT Hedera Hashgraph. Now, why is transactions important for native staking, and why could this all be connected in terms of what will be happening next. So at the moment, we're currently in phase 2 of the staking sort of timeline. During this phase, supporting exchanges and wallets will be able to integrate the staking functionality to provide account holders with an easy way to stake their HBARs, but will not distribute any rewards. So, okay, we've been at that stage for quite a while at the moment. In addition, web applications for delegating stake will likely be built for utilization by the retail ecosystem. So obviously that's providers like STADER, Hedera. And then during this phase, there will be visibility of stake per node. And we can see that, we've just seen that on HashScan for the minimums to be met. For the staking reward launch program to take place, the Hedera Governing Council will determine when the Hedera ecosystem has reached a minimum viable set of integrations to enable staking rewards. And of course, that is because you are providing HBARs or staking them to the different nodes in order to provide consensus and secure the network. By doing so, you then receive a distribution of the fees that the Hedera network collects as a reward for helping to participate in those operations. Once that is determined, the council through CoinCon will vote to update the reward rate, and subsequently the mainnet will be released with the agreed upon reward rate. So we can see here we're basically waiting for the minimum viable set of integrations, and that ties back in with the recent transactions TPS we've been seeing on the mainnet, as well as the testnet, as well as things like that step icon being tweeted out by Hedera. And then we can also see, once updated, the staking reward account will be eligible to distribute rewards earned by stakers once the reward threshold of 250 million total HBARs has been met. We already know that the 0.0800 account has been funded. I covered that in the previous video, where there was some more HBAR being sent from the HBAR Foundation to that account, and then rewards will continue to be distributed even if after this time the balance of the account drops below 250 million. And then we can see phase 4 is the complete staking implementation, 24-hour updates for visibility into stake per node, and the node uptime feature will be released. This means that instead of updating node stake visibility on a monthly basis, node stake visibility will be updated on a 24-hour epoch interval. Okay then, so we're really waiting for these key integrations to go live in order to be collecting the fees to redistribute those to holders. If I flick across and we actually take a quick look at Dragonglass, of course, in the last couple of videos, I've been looking at the number of transactions that we've been seeing processed across the mainnet. If we actually come into here and we go to the add topic, so if I literally search the word AD as an add topic, and we see this here, we go over to this ID. The add topic memo is AD topic, and these are the guys that have been processing a huge portion of the transactions we've seen, forming part of those really high TPS figures on the mainnet. And the add topic being called AD topic most likely is Avery Dennison's topic, effectively. Some people believe this could be ad stacks, but if you actually look at the topics, they have a topic themselves, literally called ads, which has been known to the community for quite a while. This is an unknown memo topic, or an unknown topic with an unknown memo, and it speaks to reason that this is most likely Avery Dennison. And of course, looking at that use case in the past, looking to bring billions of transactions across to Hedera, and this would probably help the the Hedera Governing Council reach the phase 3 integration minimum for use cases, due to the sheer volume of transactions that Avery Dennison would be submitting to the network. So that's kind of where we are at the moment for native staking. We look like we're approaching the beginning of phase 3 / maybe already in phase 3, and we're gearing up for some announcements by the looks of it from Hedera themselves. After all, they have just released some information talking about make sure you are ready. Speaking of which as well, interesting tweet here from LED saying the Aussies aren't mucking about with staking. To FPOS is Hedera node number 17, the second highest staked amount next to Shinhan Bank over on the network. So we can see stake for consensus, nearly 6% of the total, the min stake and the max stake, which is what we were looking about a minute ago. I will say many of us, including myself, are still using STADER Hedera at the moment until native staking goes live. You've still got an APY of nearly 11%, and you can continually earn those rewards until native staking goes live. It is highly likely that the rewards pool will drop off or taper off very quickly as we approach native staking. Of course, STADER Hedera is being funded by the HBAR Foundation, and I'm sure they're privy to this information before the main retail community effectively are aware of what will be happening next. And of course, if you wish to do so, you can effectively proxy stake to a node via STADER Labs, or alternatively, you can withdraw all your Hbar and then natively stake from your wallet. Many of you as well will be asking about ledger support. I spoke about that in a recent video again, where we saw some teaser information from Pluto, one of the main developers / founders over at Hashpack. And he was clearly working on the integration for ledger support for Hashpack. And then potentially as well, we'll be seeing some interesting stuff regarding HTS tokens and native staking directly from them. But unfortunately, as of right now, no more information on what's happening. Jumping across to the ecosystem at large then, Source can now be bridged to all supported networks on HashPort's network. This further extends the potential for partnerships to cross-chain protocols. So you can now see that porting Source is available to Ethereum, Avalanche, BNB's chain, and Polygon all through HashPort. And again, they summarize it really well. This is massive potential for partnerships on cross-chain protocols. It gives the Source token and the Hedera token service and the tokens built on top of Hedera more and more exposure to these other communities that in turn potentially could lead to more capital flowing across the Hedera's network, higher prices for Hbar, and a lot of these underlying HTS tokens that will take benefit. And of course, we can see as well over the last week, Source has been performing quite well. It is of course live on a centralized exchange, and it is visible on CoinMarketCap and CoinGecko, with some more information as well being available about the DEX on DeFi Llama. Right then, what was this tech titan nonsense that I was speaking about at the beginning? And it's all stemming from Google's recent announcement for them to enable crypto payments with their new Coinbase deal. So Google and Coinbase have signed a deal which will see Google accept cryptocurrency for some of its cloud computing clients. So it's important to make the distinguish between the different arms of these corporations. Now, Google Cloud is effectively its own entity in its own right and runs as a segregated arm of the company. Many of you should be familiar with Google Cloud. They provide majority of the online services, but also Google Cloud are the Hedera governing council member. And it is the Google Cloud division that will be allowing and enabling crypto payments with this Coinbase deal. So this enables Google to go after cutting-edge crypto and Web3 companies who want to use digital currencies as their payment method, and Coinbase will be receiving a kickback of these payments and will enable them to continue to diversify away from revenue based on trading volume. And partnerships like this with Coinbase, as well as them being a payment medium or payment facilitator for these large corporations, is in turn you may also see reduced transaction fees and associated costs on Coinbase, which could make it a lot more competitive for larger retail customers and potentially even institutions as well. So again, this is a win-win for everyone involved. I actually retweeted this with a summary of some different information. Obviously, it looks like Google is betting big on crypto. In fact, they have been for quite a while. And there are, of course, other tech titans like Meta, or previously Facebook, that are betting big on things like the metaverse. The search engine as well now is beginning to index blockchain addresses for Ethereum. So you can see this, I've retweeted it from Blockworks. If you literally Google an Ethereum address, it shows you the Ethereum balance live within Google with the links back to Etherscan. Further to this, they've also partnered with Coinbase to accept payments for their cloud services. And at the moment, they will be accepting payments in Ethereum, Bitcoin, and Doge, ironically. And of course, this will be starting in 2023. Now, to put some figures to this announcement, Google Cloud Services currently account for 7.5% of the revenue annually generated by Google as a corporation. This is around $19 billion of 2021. So far in 2022 alone, the quarterly revenue has grown 35% year over year. So a huge increase for that portion of the business. Whilst this is a huge amount of dollars that could be transacted via cryptocurrencies, it also shows the scale and potential. And what I effectively mean by this is we can see that revenue growth of 35% year over year, plus the fact that Google Cloud is only 7.5%. It's not even 1/10 of the size of Google's revenue on an annual basis. If this sort of pilot scheme that Google Cloud is venturing into of accepting cryptocurrency payments is very successful, you may see that spread internally to some of the other arms of the divisions. You've then got even more of that revenue that can be transacted via cryptocurrencies, not to mention if this is successful and seamless for Google's cloud arm, you could see this spread across into some other large-scale tech companies, which of course have revenues in the billions as well. In short, you're going to potentially see an awful lot more capital being transacted via cryptocurrencies. And not only that, if you're transacting in cryptocurrencies, it means the buyer and seller of each side of the transaction is of course going to be holding cryptocurrencies. And that again, in turn, will push up the prices of a lot of these cryptos that are being used to facilitate payments. Of course, as well, Google Cloud operates a Hedera node and is a governing council member of the carbon negative DLT, Hedera Hashgraph. They have also been working with Hedera Hashgraph to support the next generation of DLTs, and the future is of course very bright for Hbar with the support of tech titans like Google and some of the other partners that are potentially coming through the woodworks. And then we had that recent governing council member addition, Aberdeen, which is of course a large scale sort of investment trust or arm with many assets under management. I think it was $500 billion in assets under management, looking to revamp the traditional financial system by utilizing DLT technologies. They have chosen Hedera Hashgraph for that. So this is probably what is driving a lot of the price action at the moment we're seeing for Hbar, and all of us are for it. Not only that, it goes even further. Hedera recently tweeted this: when Google Cloud next asks what's next, the answer is Hedera. 𝗟𝗜𝗡𝗙𝗦𝗧𝗔𝗠𝗡𝗥 𝗟𝗜𝗏 is here to explain how and why our work with Google Cloud and many enterprise partners is changing the world of Web3. Blink and you might miss it. Now, I'm not going to play the video, but we can see this is Google Cloud's own YouTube channel, and we've got a Hedera member of staff effectively talking about Hedera and the adventure to decentralization, as well as what they're doing in the world of Web 3.0, and that is being broadcast to those 136,000 subscribers via a almost verified channel or information channel, which is of course the Google Cloud YouTube channel itself. Again, these are some massive partnerships that are beginning to bear fruit, which many of us have been waiting for a long time. See there, Web23 saying incredible. It definitely is indeed. Performance, of course, of Hedera, if anyone needs reminding, 10,000 TPS, which is being throttled, and with the potential of step functions. You've got finality within seconds, 4 to 5 seconds. You've got the ABFT security, not leader-based with proof of stake. The stability, no forking of the network. Fees are stable and fixed in USD or dollars. Governance, running initial network nodes. You've got the roadmap and treasury management, and you've got the sustainability, of course, it being carbon negative infrastructure with the lowest carbon footprint of any public network. And of course, even more so than majority of the private networks that currently run majority of the payment transactions, for example, Visa and MasterCard. Tons of potential here for Hedera, and I'm all for it. Hopefully you guys are enjoying what's currently happening in the markets at the moment. Hopefully you're continuing to average into your positions. Make sure you're doing your own research. And of course, none of this is ever financial advice. It's just to give you guys a bit more of an understanding of what is currently happening within crypto, and of course, these projects like Hedera and Quant. If you did enjoy, leave a like. Make sure you subscribe for future content. Lots more videos planned and we'll be releasing soon. And until the next one, I'll catch you then. Cheers.